Elon Musk and his well-established electric vehicle company founded in 2003 have been revolutionizing the way we think about cars. From just imagining and watching self-driving cars in superhero and futuristic movies to actually implementing and realizing this technology into the world is nothing short of a miracle. Even though Tesla sold a large volume of cars last year, its stock value hasn't responded much and, in fact, ended badly for the year 2022. But analysts predict Tesla stocks could perform extremely well this year and reach the $400 mark. Let's now explore some of the key factors that could cause the Tesla stock price to soar high this year. Will Elon's plan for the company make Tesla stand out amongst the rising competition in the market? Let's find out. Despite delivering a record 1.3 million electric vehicles in 2022, electric vehicle company Tesla saw a huge decline in the price of its stock. Investors believe that Tesla is not exempt from the problems that the automotive industry as a whole is currently experiencing. Tesla has seen rising expenses and supply chain hiccups, much like its rivals. The business was compelled to lower the price of its premium Model 3 sedan and Model Y SUV in China and the US as a result. Moreover, Tesla lost 55.39% more than its Q4 valuation in 2022 than the combined market capitalization of the top 10 electric vehicle producers. Tesla's CEO Elon Musk has fallen short of accomplishing a significant number of his declared objectives. The Cybertruck's delayed release, the lack of robotaxis on the roads, and the ongoing delay of Level 5 fully autonomous driving are examples of promises ingrained in Tesla's value that haven't materialized. 2022 was a challenging year for Tesla as the company was overvalued. But despite this, a second recession compelled the business to cut prices by as much as a fifth in order to boost demand. The stock price of Tesla increased by roughly 54% in 2023 after falling by around 54% in the final 3 months of 2022. Some of the factors that caused this rebound include China with tax credits and CEO Elon Musk. Wedbush analyst Dan Eves, who has been serving various car buyers after Tesla cut its prices there in early January, stated that the reductions are working and sales have gone up since. In response to the growing demand, he said, Tesla increased output at the Shanghai facility to about 80,000 vehicles per month. In January, Tesla shipped around 66,000 units from the factory. But how was Tesla able to reduce the cost of its flagship models all of a sudden while increasing its production? Let's dig more into how the company made this possible. From a starting point of a base cost of goods sold per vehicle of $36,000 in 2021, Tesla is expected to expand the manufacturing footprint to lower cost of goods sold regions and facilities, specifically the new Berlin and Austin plants, which are less expensive to operate than the Fremont facility and could achieve an average cost reduction of $2,400 per vehicle or 6.5%. When averaged out globally, US battery production credits in Fremont and Texas may save an additional $800 per vehicle. When added up, the potential cost savings of $3,200 per car may increase the average selling price by 5.5%. All these led to Tesla offering better prices to its customers, in turn increasing its overall demand for this year. Despite a growing number of competitors in the electric vehicle market, Tesla continues to be the market leader in electric vehicles thanks to its vertical integration, which boosts profits, and its self-driving technology. In the most recent quarters of 2023, Tesla revealed its production and deliveries. Tesla outperformed both its revenue and delivery goals. The best performing stock on the year-to-date chart is Tesla. Since January 2023, Tesla stock has increased by over 80%. Tesla delivered 422,875 cars in the first 3 months of 2023. In comparison to the 310,048 deliveries reported during the same period in 2022. The delivery report reveals a 36% increase in deliveries. Tesla said that in Q1 of 2023, it manufactured 19,437 Model S and X vehicles, as well as 421,371 Model 3 and Y automobiles. 2023 is already in sight and is anticipated to be a significant year for Tesla. There is also the probable introduction of the Cybertruck and Semi, whose entry into new markets might be extremely beneficial for the company's profits and sales. 5 years after its first announcement, Tesla finally showed its eagerly anticipated Semi, an 18-wheel long-distance electric freight truck, in early December. Tesla started shipping its long-haul semi-trucks to PepsiCo recently. Musk has also said that he intends to develop a long-haul truck charging network. Musk did not provide a price for the 18-wheeler. The Semi can reportedly drive 500 kilometers on a single charge. According to Tesla, it can accelerate from 0 to 60 in 20 seconds. The business intends to supply 50,000 units by 2024 and anticipates ramping up manufacturing during the following year. The Tesla Megapack Power, Europe's largest battery energy storage system, is almost finished being built by Tesla. According to experts, this will increase Tesla's current energy storage revenue by a factor of 10. bringing in an additional $10 to $15 billion in revenue for the business by 2023. Tesla Megapacks are large-scale energy storage systems. They can store and distribute energy produced from renewable sources like solar or wind power and are effectively big, stationary battery packs. By offering dependable, effective energy storage options for sizable renewable energy projects, Tesla is working to create a sustainable energy future. Elon Musk, the CEO of Tesla, announced his third major master plan at the company's first ever investor representation on March 1st at the Gigafactory in Austin, Texas. In essence, this is where the billionaire expects Tesla to go in the next 7 to 10 years. The third stage of Musk's master plan has a wider scope than the previous two. For instance, the firm had realistic goals in Musk's original master plan, which was outlined in a blog post from 2006, including earning money from a single vehicle, the Roadster, in order to reinvest in creating more accessible lines like the Model S, Model 3 and Model Y. In Musk's second master plan, which he unveiled in 2016, he offered more substantial suggestions for Tesla, many of which have not materialized. The Tesla CEO discussed his idea for a self-driving car that you could rent out to other people when you weren't using it. It was aptly titled Master Plan Part 2. The Tesla would almost drive itself to the location where a renter would pick it up, generating income for the Tesla's owner. This clearly hasn't occurred. The 2016 master plan makes no mention of high passenger density urban transit. And although the anticipated heavy-duty truck, the Cybertruck, seems to be on the way at some point, it hasn't exactly hit the market after 7 years. But despite the positive analyst sentiment after Investor Day, the Tesla stock saw a nearly 6% drop. One of the factors for the fall in Tesla stock prices is the ongoing Twitter controversy, which started when Tesla CEO Elon Musk bought Twitter in October 2022, after which the Tesla shares dropped 17% since then, whereas the Nasdaq Composite is up about 11% over the same period. But now the Twitter overhaul has slowly started to fade, and we expect that to be reflected in the share values as well. Tesla stock has also changed since Musk was deemed not accountable for shareholder losses, resulting from his funding secured tweet from last year. Now the key factor that expects the Tesla stock to boom this year are the bullish option traders on the market. In option trading, contracts are bought or sold that grant the holder the right but not the duty to purchase or sell an underlying asset at a certain price within a specific window of time. When purchasing an option, the investor must pay a premium in exchange for the right to purchase or sell the underlying asset at the strike price. While when selling an option, the investor receives the premium in exchange for taking on the risk that the buyer will choose to exercise the option and purchase or sell the underlying asset at the strike price. Investors should have a solid grasp of the underlying assets and market circumstances before engaging in option trades because it may be a complicated and hazardous kind of investing. The high volatility of the Tesla stocks makes it a favorable choice for investors to trade options on them. Tesla options are traded more than those of any other stock, according to CBOE data cited by the Wall Street Journal. Nearly 3 million contracts for Tesla options are traded daily, up from 1.5 million a year ago, accounting for roughly 7% of all options trading. And on January 6, the largest day for option transactions, Tesla saw almost 5.2 million options deal, or 10% of all volume. After a horrific 2022 that saw the stock fall 64% because of worries over Musk's obsession with controlling Twitter, Federal Reserve rate rises, and a deteriorating economy, investors are still showing signals of confidence about Tesla. In conclusion, 2023 seems to be a promising year for Tesla shares due to various factors, such as price cutting, new launches, Investor Day, and option traders that are even more bullish than Elon Musk. Despite the fact that Tesla stocks are highly volatile, analysts predict the share values to soar up to $400 in 2023. That is it for today. I hope you enjoyed this video, and for more such content, stay tuned and don't forget to subscribe.